How's it going, everyone, and welcome back to another T-Talk. In this T-Talk, we are going to have Garrett on here for a second time to talk about universal models, swing points, and SMT. I hope you guys enjoy.
What is up, everybody? I am back for a second episode of T-Talks. Thank you, T-Trades, for the opportunity here. Today's lecture, we are going to cover reversal confirmations, a complete approach to the market. The lecture topics are going to be universal model, swing formations, SMT pairing, and two-stage SMT sequence. I'm going to show you guys how to pair these all together for a complete framework and approach to the market. Credit goes to TTrades, AM Trades, the MXM Trader, Trader Day, and ICT, which I would consider all my mentors. I have taken little bits and pieces of each one of my mentors and blended them together for my personal approach, and that's what I will be sharing a piece of with you all today. Let's get into it. So here we are on universal models. We're going to be covering internal to external, external to internal, and manipulation ranges. This is something I really learned from the MXM traders back when I was first learning how to really trade ICT. He really simplified it. So I'm going to try to do my best here for you guys. So all internal to external, or a universal model really is a framework, right? It tells us, hey, when price hits this key level, in this case being internal range, a fair value gap, we can expect price to reverse and trade to the high or the external range that caused the retracement into the gap, right? So here we are on external to internal. Once price reaches an external high or manipulates a range high, we can expect price to retrace back into the range to see continuation from that gap or a failure to reverse from this gap and target the opposing side of the range. But regardless, this fair value gap becomes your first target. And lastly, order pairing ranges or manipulation ranges, a high or low or range low being the key level, the opposing side of the range or swing high being the targets. Now we are going to be going over swing formations. Why are swing formations so important? Because the market cannot reverse without a swing formation. This is the whole logic behind the TTrades Fractal Model and why it is so logical. So firstly, let's go over a candle 2 closure. What is a candle 2 closure? It is simply when candle 2 closes back inside of candle 1's range. Once we have that closure, we mark out equilibrium of the previous candle's range, wanting to see the upper half of that range support price higher and form the low of candle 3. So why do we do this? Why do we mark out EQ of ranges? It is a mechanical way to measure wick size. What is wick size and why do we care about it? Well, we know that expansion candles, right, they have these small wicks. Reversal candles have these large wicks, which is what we typically want to avoid. We want to trade expansion. With this large wick, we know price cannot expand. So after candle 3 expands, seeking continuation in candle 4 is if we close candle 3 above candle 2's high. Once we have that closure, mark out equilibrium of the candle 3 expansion. This is where we seek a candle 4 continuation, forming the low in the upper half of candle 3's range. So here we are with a candle 2 reversal to expansion. It is the exact same thing as a reversal candle. The only difference is the wick size, right? So here we can see that we have a small wick, which allows price to reverse and expand in the same candle. So when candle 1 closes an expansion candle after hitting a key level, we can already anticipate a reversal. But if candle 1 did not reverse, then we must reverse off of its high or low. Here, as you see, we reverse off the low. If we form a small wick, then we can actually participate in this candle because it supports expansion away from the reversal. So here we are with a candle 3 closure. This is simply when candle 1 hits a key level or candle 2 hits a key level, but we do not get a candle 2 closure, as you see. This is where candle 3 will just expand away from candle 2's low without actually taking that low out. So prior to candle 3's open, we cannot anticipate this reversal because we have no closure, right? The only way we anticipate this reversal is after the swing formation actually forms, right? Candle 1, candle 2, candle 3. Once we have a strong candle 3 closure, mechanically defined as closing over the body of candle 2, this is where we can mark out equilibrium of candle 3's range, seeking expansion or continuation in candle 4, where the low is formed in the upper half of candle 3's range. So now we're going to put the two together, universal models with swing points. We know that when market hits these key levels, we know we should expect a reversal. And we also know that the market cannot reverse without a swing point. So this is when we blend the two together to confirm our framework. So as you can see, market trades lower into this gap, creates a candle 2 indicating a reversal from the internal range of liquidity. Once we hit internal range of liquidity, we know we should target the opposing side of the range that caused the retracement. This is where we seek a continuation within candle 3, respecting the upper half of the previous candle's range. So here we have a reversal into expansion candle, where candle 1 hits the key level, being external range of liquidity, but candle 1 does not reverse. We're opening near the candle 1's high, so that becomes the reversal point. If we create that small wick, this is what allows the candle to reverse and expand into the fair value gap. So we actually can participate in this reversal candle. So here we are with order pairing ranges. Here we have a candle 3 closure, where candle 1 trades into the range low, but does not reverse. So we do not participate in this candle because it does not support expansion. And once candle 3 opens, we also cannot participate in this candle because candle 2 showed no signs of reversal. So we must wait for the close. If it closes above the body of candle 2, this is what validates us to trade candle 4, continuation, marking out equilibrium of candle 3 and looking for candle 4 to respect the upper half of that range and targeting the opposing side of that range. Now we're going to get into SMT. One thing we know about the market is the market cannot reverse without a swing point, but the market can also not reverse without SMT. So this is where we're going to combine the two. And this is really the whole goal of this lecture, is to show you the power of combining the two and how you can build a mechanical framework and system around this logic. With SMT, we must understand the correlated markets to pair divergences with. So for me personally, I view correlated markets through a triad that is simply 3 correlated markets. So for Forex, we have DXY, Euro USD, GBP USD. For indices, we have NQ, ES, YM. For gold, we have gold or GC, XAU Euro, and XAU GBP. For the oil triad, we have CL, RB, and HO. Firstly, we're going to be using SMT between highs and lows. This is the most common form of SMT. It is where one market manipulates a low or range low, where the other one simply does not take that low. This is a Kraken correlation and signals a potential reversal. Secondly, in the other key level we are going to be using SMT with is a fair value gap, or also known as SMT fill. This is where one asset fills in a gap or trades into a gap, and the other one leaves it open, right? A breakaway gap. And this can signal a potential reversal. So now we're going to combine swing points and SMT with our universal models for a mechanical approach to the market. So as you see, price trades into the gap, creates SMT with the gap. That is our first sign of reversal, and that is confirmed by the candle 2 closure. Once we have that close, mark out equilibrium or 0.5 of that range, and this is where we look for candle 3 continuation to form the low in the upper half of candle 2's range. Here we are with external to internal, where one asset reaches into external, the other one does not. This creates that divergence, that potential reversal. And since we have this small wick, we can actually trade it back into the range, right? We can actually anticipate this reversal, not only because of the small wick, but it is also because of that divergence. Here we have manipulation ranges where one asset trades into the range low or swing low, the other one does not. It creates a failure swing. This is what signifies a potential reversal that is not confirmed until we get that candle 3 closure closing above candle 2's body. Once we have that closure, we can anticipate a candle 4 continuation into the opposing side of the range as our target. And as you see, after we mark out equilibrium, it respects EQ of that range, supporting expansion. Now we are going to be going over swing confirmations. Since we know the market can't reverse out a swing point or SMT, now we can apply SMT with swing points. So here we have swing point SMT between candle 1 and candle 2. On the correlated market, this is where we create that failure swing that indicates that potential reversal. And this is where we look to trade a candle 3 continuation. Here we have an SMT between candle 2 and candle 3, where on the candle 2 closure, the SMT is confirming that reversal, and we look to trade candle 3 continuation lower. So here we have a two-stage SMT. A two-stage SMT is where we have one stage of SMT, and immediately following that is confirmed by a second SMT. We can use this via swing point, where we have an SMT between candle 1 and candle 2, and then an SMT between candle 2 and candle 3. This is a very strong signature in price that we can use to confirm reversals. Now we are going to be covering the PSP. This is a concept taught by Trader Day, so all the credit in the world to him. It's very, very simple. It is where between a correlated markets, they close in opposite directions. So as you see over here, this candle closes bullish, this one closes bearish, and this indicates a potential reversal. It is as simple as that. Now we're going to go over a two-stage PSP. It's essentially what we just talked about with SMT between candle 1 and candle 2, or candle 2 and candle 3. Now we're just adding in a precision swing point. So with this SMT between candle 1 and candle 2, this is our first stage SMT, which is confirmed by the PSP, creating a two-stage SMT. Then we look to trade the following candle in the opposing direction. Here is a two-stage PSP between candle 2 and candle 3. This is when a SMT between candle 2 and candle 3 confirms the PSP. So as you can see, the PSP forms first, and the SMT between candle 2 and candle 3 forms after. That is what confirms the PSP. This is when we look to trade candle 3 lower, or a candle 2 reversal into expansion. And here is the continuation PSP. This is what we look for in expansion away from a true reversal towards a target. It is simply where one asset retraces back into the range. On the close, it creates a PSP. On one market, it runs out the PSP's high, which creates that two-stage PSP. On the other asset, it does not create a swing point at all. So now what we're going to do is be covering SMT sequences that confirm our universal model framework. So the first sequence is simply where we have an SMT fill, where one asset trades into the gap, the other one does not. This can confirm our internal to external range framework. The next SMT sequence is simply where we trade into an external range, but we do not form SMT at that level. This is where this is confirmed by a swing point, right? So SMT between candle 1 and candle 2. Once that's confirmed, then we can trade back into the range, completing this external to internal model. The next scenario is when we just have a PSP close, right? There's no SMT with our key level being a high or low or fair value gap, but we get a precision swing point. This can be enough to hint a reversal to go from external range low to external range high. So now we are going to be pairing two-stage SMT sequences with our universal models. So here we have our first stage SMT with the fair value gap itself with our key level. And that first SMT is confirmed by a second stage SMT via swing point with candle 2 and candle 3. The next two-stage SMT sequence is when we hit a fair value gap. We do not have SMT between our key level, but we get our first stage SMT with candle 1 and candle 2, and that is confirmed by candle 2 and candle 3 SMT as our second stage SMT. In this two-stage SMT sequence, we have an SMT with our key level being a high or low or a fair value gap, which is confirmed by a precision swing point. This confirms the reversal, and we look to trade the following candles as continuation towards our target. This next two-stage SMT sequence is where we hit a key level, do not have SMT with that key level. Our first stage SMT will be a precision swing point confirmed by an SMT between swing points. Here we have a cracking correlation with candle 2 and candle 3. Once that forms, we look to trade the continuation away from the external range towards the target, which is the opposing side of the range. And lastly, this is the highest probability reversal signature or confirmation that I use. That is when we have our first stage SMT with a key level, in this case, the internal range liquidity or fair value gap. Next, we form a PSP, and then we get a cracking correlation with a swing point. So essentially, we have a SMT with a key level, and then a two-stage PSP following that first stage cracking correlation. Now let's get into some examples. So with this first example, we pretty much have a model inside of a model where we have price manipulating the range low, price displaces away. That displacement away creates a gap, leaving the opposing side of the range as a target, creating failure swings. So when price trades in this gap, we want to use this gap as a key level to reach into the opposing side of the range as our targets. And as you see, when price reaches into that level, it is confirmed by SMT with the correlated asset being HO. Once this forms, we look to trade the following candles away from the reversal into our target. Here we are on the oil trade again. We have HO on the left, RB on the right. What we see is price has expanded away, leaving failure swings at the point of retracement here, traces into a gap. We do not form SMT with the gap, but we get our confirmation via swing point. Once this forms, we look to trade the distribution into the range lows. So here we are on the gold triad. We have GC on the left, gold GBP on the right. Now it is important when using the gold triad that you use the right feed. With this forex.com feed, it actually opens up at 1800 as well. We have GC on the left and gold GBP on the right. As you see, price trades into a range high on both assets and does not create that SMT. And that reversal here is confirmed by a PSP. Once that forms, it confirms the reversal and we can trade into the opposing side of the range as our targets. Here we're going to be going over a two-stage SMT sequence where the first SMT is between a gap on the 4-hour time frame. We drop lower to the 30-minute. This is where we see our second stage SMT confirming the higher time frame SMT. Once this SMT forms, it confirms the reversal and we look to target the opposing side of the range, which is that external range on the 4-hour time frame. And as you can see, price trades into it perfectly. And this is where we look for continuation PSPs to form. So as you can see with this 530 candle, how does it form? On the left of screen, it closes bearish. On the right of screen, it closes bullish. On the right of screen over here, we create equal highs here. So a lot of you are going to think this is a PSP to reverse price. This is where narrative comes in. If both assets are expanding away from the original reversal, typically that means both assets are going to reach a draw liquidity, especially when it leaves these highs, right? We automatically know this is like a retracement. Once the asset to the left runs this candle's low, that creates that two-stage PSP, creating a candle 2 on this asset. As you can see, we have that small wick. Once you confirm this wick, you can then trade the expansion into the draw on liquidity. With our next reversal sequence, we have an order pairing ranges framework where price trades into the range high, but does not form SMT with that level. So therefore, we look for a swing confirmation to confirm this reversal. And here we have a two-stage SMT between swing points, where our first stage SMT is between candle 1 and candle 2. Over here, as you can see, we create a failure swing that is immediately followed by a second stage SMT between candle 2 and candle 3, where on the left screen, we create a failure swing. Once that forms, that confirms the reversal, and we look to trade the following candle lower into our targets. Here we are on the indices triad. Left of screen is NQ, right of screen is YM. As you can see on YM, we run the range low. This is where we look to trade the range high. And as you see, we have SMT with that range low, which is immediately followed and confirmed by a precision swing point. So what makes this SMT so significant is the timing of when this SMT is actually printed. As you can see, this PSP is the 9 a.m. close. What resides within that 9 a.m. time window is the equities open, right? We can use this driver to pair with reversal or manipulation. And as you see, once we get that candle 2 closure, this is where we seek a 10 a.m. continuation. I actually took this trade as well, but on YM. As you see, once we get this strong candle 3 closure, this is where we seek a candle for continuation into our range high. Here we have an order pairing ranges model between the gold triad. Here we have GC on the left, gold pound on the right. Pound engages with the high here, but does not form SMT. So what do we confirm this with? Is a swing point in a swing confirmation. This swing confirmation is a PSP as our first stage and a cracking correlation between candle 2 and candle 3. As you see, confirming that PSP, creating the two-stage SMT. And as you see, GBP trades into the range low, while the stronger asset GC trades into this gap. So this can be viewed as external to internal. So here we are on the indices triad. We're going to do a top down on a trade that I took a little while ago. and this is something I want to touch up on, and it is actually when SMT breaks, and this is a potential trigger for markets to reverse. So you can actually see that here with YM. Mark out this same high that just got traded into on NQ and ES. So as you see, we clearly failed to manipulate it. If you've seen my SMT video on YouTube, you know that this is when SMTs are typically going to fail. So as you see, once the weakest asset actually catches up to that SMT and breaks it, this is when markets can potentially reverse. So you're actually going to see this across multiple time frames here. So now we're going to drop down to the daily, and you're going to see the same exact sequence. So dropping down to the daily here, what do we actually see? Let's mark out these highs on the triad here. So marking out this high here, what do we notice about it? ES just hits this high, which creates an SMT with YM. But what about NQ? Let's mark out that same high on NQ, which is right here. We can clearly see that the market clearly failed to manipulate it. So this means we can expect one or both assets to catch up, and this sequence is even higher probability than the one we saw on the weekly. This is essentially where the middle asset breaks the SMT, and that is the trigger for reversal, while the third market or the weakest market is creating a divergence with that high. If we go back to the weekly, this is simply where all markets break the SMT and the lagging asset is the trigger for reversal. So now dropping down to the 4, let's view that profile. How do we want a bearish data form? We want it to open high, right? So it opens high and creates the high of day from a key level, right? This range high, which is actually breaking that higher time from SMT. Now, what do we want to see? If you've seen my last T-Talks, we want to see that 4-hour swing formation. So what would this be? A 4-hour C2 closure, which is a London reversal. But what is it also? What does this closure also create? It creates a precision swing point, right? So boom, this would be your second stage Kraken correlation because your first stage Kraken correlation is with the range high, right? Now, if you guys have also seen my PSP video on YouTube, you know what this is, right? If you see my SMT video, my PSP video, this is a strength switch PSP. We're not going to get too deep into it here, but I definitely recommend checking it out. But this is not what I took, right? I don't trade London. I don't trade early on in this candle. We're going to actually trade the continuation around 9:30. So let's now go ahead and drop down to the 30-minute chart. So here we are dropping down to the 30-minute time frame. What are we trading? We're trading a New York continuation with that 2 a.m. reversal or London reversal. And as you see on YM, 9:30 trades back into the range, taking out this swing high, which we can use as our first stage SMT. When we trade into that high, what do we create? A PSP. Why is this significant? Because 9:30 creates it. We can pair a driver with manipulation. And here is that sequence where we get an SMT with a key level followed by a 2-stage PSP. Like I mentioned, this is the highest probable reversal confirmation. So like I said, I did trade this. I took this on the 3 minutes. As you can see, this reversal is confirmed by this order block here, or this change in state delivery using time frame alignment. Here I am actually trading a C2 reversal, right? If it has that small wick, price can expand away from our key level, which is the range high. What can I target? The opposing side of the range, right? So this would be order pairing ranges. But this low here is not the actual higher time frame target, right? It's just a low on the way to our higher time frame target. This is our actual higher time frame draw right here. So now let's drop into the 3 minute, check out what our entry looked like. So like I said, entered on the creation of the CSD, and I looked for this range low for a 7-hour trade. Let's see what happens. As you see, price kind of messes around a little bit, but ultimately we get to our draw liquidity, and that is a very good example of going from the top down into confirmation. Now let's go into another top-down example. Here we are on RB. Let's mark out that weekly profile. So here we go. Monday, we open up right here, the new weekly candle. And for this week, my drawn liquidity was actually all these lows, right? Looks very obvious, but price actually creates a divergence with one of these failure swings, which I do not deem as relevant until price shows me that it wants to expand away. So as you see throughout the week, we ended up expanding away. Once price expands away or prints that reversal signature, that's when you can actually trust trading away from failure swings. So as you can see, the first 3 days of the week actually expand, right, creating a daily fair value gap. And as you see, Thursday retraces back within the weekly range and prints a reversal, right? So if you look at the correlated market, we actually have an SMT with this gap. So what is that? That is a SMT with a key level. We can use this key level to get to our overall draw on liquidity, which is this range high. Now that we have our candle closure, what can we do now? We can actually mark out EQ of this previous day's range. We want to see the next day form its low within the upper half. So now all we need is a daily profile to confirm this narrative. So let's drop down to the 4-hour. So here we are on the 4-hour chart. We have marked out our daily open. How do we want a bullish day to form? Ideally, we want it to open low, respect the upper half of the previous candle's range, forming that small wick so we can expand. So as you can see, we open low first, respecting equilibrium of the previous day's range. This is actually where we form an SMT between candle 1 and candle 2 on the 4-hour time frame. If we drop lower, we can actually see a 2-stage SMT. Here is our first stage SMT. Here is our second stage SMT. So now we have a 2-stage SMT confirming this low of the day. If you just look at overall phases of price, you have our SMT with that previous day's low, which is that daily fair value gap. What kind of phase of price is printed after that SMT? That V-shaped reversal, right? You see in my first T-talks, we know that this is a reversal signature. This confirms the reversal. And as you can see, this can be a potential target, but really our overall target is this higher time frame draw on liquidity. As you can see, when price expands away, it leaves all these failure swings, right? What do we see here? Large expansion range followed by a choppy and slow retracement. We know that is a continuous signature. So when we actually trade into a relevant level, which is this fair value gap located within the upper half of the previous day's range, this is ideally where we want to see that reversal, right? And that is confirmed by this 2-stage SMT. So now let's drop to the 30-minute so we can get a little better visual representation. And look what we have here on the 30-minute, right? Price trades into our key level and expands away. What is that form? That V-shaped signature. Once we have that V-shaped signature, that confirms the low of the day. Now we're looking for a continuation. You can see that we have a fair value up here. But when I go to the hourly chart, this is actually where we see that continuation PSP, right? Why is this a continuation PSP? Because we still have our target open up here. The continuation PSP is forming after we form the low of the day, so it's within continuation. So any PSP opposing our drawn liquidity will not be used as reversal. I know when I first learned this concept, it really confused me, and I would always get stopped out trying to trade this reversal, when in reality, it's just used for continuation. So let's drop into the lower time frame. This is personally what I took. Now, ideally, you enter down here by the actual reversal, but I was not on the charts at this point. This is around 8 o'clock here. This is the ideal area to get in right here. This is the actual 2-stage SMT down here, but I opted to enter on the continuation over here. So I got on around here, right? I entered this gap, I believe. Yep, you can go check my X or whatever, right? And I targeted this high for around 2.8 R. Let's see how that plays out. Very nice expansion all the way to our draw liquidity. And yeah, that is a nice top-down example there. For our last example, we're going to be covering a trade that I took on RTY. So let's get into it. Here we are on the daily. First, let's cover the higher time frame framework and intra-week development. So as you can see, price kind of opens up within this gap and we expand away, kind of creating these failure swings, right? So originally, this is really not something that I really like to trade away from. But when price failed to manipulate this high here, this tells us that we will not do something like this, right? We will not manipulate this high to then go lower. We can then manipulate the internal high and target the external high as a potential drawn liquidity, trusting this low of the week. So here we are on the 4-hour. As you can see, price expands away from the low of the week, creating those failure swings. Like I said, when price fails to manipulate this internal high here and starts to continue through it, that's when we can assume, okay, we can definitely trust to trade away from these failure swings and target the opposing side of the range. Here we have 1800 creating the low of day, pretty much just expanding off of the open. This is when we create an SMT fill with YM. That is the correlated market for RTY. I don't really use NQ or ES for it. So now let's drop into the lower time frame. So here we are on the 30-minute time frame. And as you can see, here is our 4-hour gap. What is that confirmed by? A lower time frame swing formation, Kraken correlation between candle 2 and candle 3. And that creates a CSD here. If we have a reversal prior to a driver, let me mark that out. What should 930 do? It should do what? It should expand away. So once that really expands away from that reversal, that's what really confirms to me that we can also trade into this higher time frame drawn liquidity. So dropping down to the lower time frame, being the 15-minute. So here we are on the 15-minute time frame, and what can we see? RTY is trading into a gap. If I pull up YM here, we do not trade into any gaps. So what would this be? This would be that continuation PSP. Why? Because we have an open drawn liquidity. We're trading it away from reversal. And this is an extremely high probability reversal confirmation within continuation towards a drawn liquidity. So what can you really trade this like? You wait for the candle close to form. As you can see, we mark out 10 a.m. open. And what this does is essentially forms the low of the 10 a.m. 4-hour candle. As it reaches into a key level, which is the 15-minute fair value gap confirmed by SMT. So now you have a higher time frame candle reaching into a key level, and it's confirmed by SMT. So now you can assume that the higher time frame candle's low is put in and trade the body, right? So once you have this little swing formation here, right, candle to closure, what do you want to do? I want to mark out EQ of this candle's range. We want to see price respect the upper half. And this is where you can use the fractal model for your entry, right? We have the SMT, we have the swing point, the key level. Now it just comes down to the lower time frame to get on side with that. So here we are dropping down to the 1 minute. Let's kind of clear all of this stuff. Here we have that V-shaped reversal signature that we love to see, right? Expansion into the low, creating the SMT, expansion away, confirmed by an SMT. Now it's about getting on side with those continuation order blocks. And this is personally what I entered. I entered this fair value gap as I was not really looking at RTY at this time. I literally opened up the charts and saw that we were tracing, and I saw this gap and said, okay, I can get on side with that. And I looked for wherever that high is on the higher time frame. And as you can see, I have it marked out now. It was about a 3-hour trade wrapping up my week. So thank you guys for all watching. Thank you again, TTrades, for having me on for the second time. Hopefully you guys learned something. If you guys want to learn more, you can check me out on all platforms. If you want in-depth lectures, live streams, access to me, check us out at themarketlens.com. I hope you stay safe and good luck trading.